Hello everyone, my name is Sadia. Today I'm going to show you a video on Martingale methods. I have created a workbook on Excel about the Martingale methods that we have been talking about in the binary lab. So I thought a short video would help some of you people to get in more knowledge and more information about martingaling. So let's have a look. I'll be posting this workbook together with my videos so you guys can use that. So basically, I have talked about three types of martingales here. The first two are those that Julian has also talked about in his webinars, and also he has posted some of the notes under files in his teachings. So let's go for the first method is called the capital preservation, and this is highly recommended and the right method or right way to go for those who have a smaller size accounts, because if you have anything less than $1,000, going for an aggressive method is not recommended. So let's have a look. Basically, I have highlighted three red boxes in each method, and the first one basically is the account size. The second one is the gain. This is the percentage return you get from your broker. So usually we have a return of 70% from G options, Cherry Trade, and all those brokers. So basically you can change this number anyway, but for example's sake I've kept it 70% because this is the norm. So the trade size is the first trade that you're taking. So let's say usually if you have $1,000 account, $5 anyway, it's a minimum size trade you can take in most of the brokers. So I have started with $5. So if you have a first trade size of $5, your first martingale should be double up or doubling your first trade. So that'll be $10. And in that case, you get a profit of $2. Now your second martingale would be doubling of your first martingale trade size, which is 10, and you will end up with $20 trade. Here you'll make a small loss of $1, but again you'll make back your $15 that you lost in your first two trades. The third martingale will again doubling up your second martingale. You will have a loss of $7, but you make up for your $35 loss, and so on and so forth. So for example's sake, I have stopped at 8 martingales. This is the number that Julian has also described in some of his webinars, that if you don't have account size that can support up to 8 martingales, then he suggested us that we should not use martingale in our trading. And you should, we can make up for your, you can, if you have a small size account, you cannot martingale up to 8 times. Please, you can make up for your losses in the next few trades. Find a better setup, find a better trade in a different currency pair, or any other type of trading. But at least you will save yourself from martingaling many times and bearing the losses. So it's always recommended that if your trading style is not martingaling, then you stick with that style. But for people who are like me and others who are okay, who are confident enough to martingale, then please make sure your account size can support up to 8 martingales. Again, the final martingale should be 20 to 30% of your account size and not more than that. So let's say if your broker is giving you a return of 80%, here you'll make less losses. Again, you can see the numbers change here. So you will have a profit until second martingale, but you start losing after third martingale. You'll make up for your previous losses, but at least you have a small loss, but you will anyway have a loss. This number really depends on your broker return. Let's say if you have a smaller return, let's say 65% in that case, you start losing after second martingale. Instead of $1, again you lose $2 here. So you can play with these numbers and have a look, and see what suits you, what's your style. Next is the aggressive method. Now again, I want to emphasize on this that this method is not suitable for small size accounts. It's only good, and if you're confident enough, you should be doing this only on bigger account sizes, more than $1,000, or even more than $1,000 basically. So for example's sake, I started with $5,000, and a gain of 70% from your broker. In this case, what happens is you double up your first martingale from your trade size. In the second martingale, you don't double up. What you do is you add your previous two trades and then double that up. So you end up with $30. You make a profit of 6, which is good, and you make for your previous losses as well. Now in the third martingale, again, you add all your previous trades and then double that up. So this is, again, as you see, it's more riskier, it's more aggressive, and not good for small size accounts. And so on and so forth. You move on, and if you see in the number here on the 8th martingale is a big number, you should have at least a 70k account size to go up to 8 martingale in this scenario. You do have good profits for sure, but your account should be able to support that. If you change this number, let's say if we go down to 65, you have smaller gains here, and if you have a good return from your broker, you have bigger gains again. So again, this depends on your broker return. Now I have come up with another method. I've named it Sadia's method on my name, and because I don't like losses, I don't even want to have $1 loss if I'm trading. So if I am martingaling, then I'm not very comfortable to have losses. Otherwise, I'll not martingale at all and move on to the next trade setup. So I have devised a method which is more suitable, I think, for medium-sized account. Again, this is open to suggestions, and any of you test my method out, and if you feel there is something missing or you want to add on more to it so that all of us can work together and make it more better. Let's say account size of $2,000. Again, the gain I've kept it as the norm, which is 70% from G options or cherry trade. All of those, they have the normal gain return of 70%. If your starting trade size is $5, which is usually the minimum starting trade size for most of the brokers. Then you martingale. First time you double it up. In the second time, what you do is you're not doubling it up or anything. Basically, I have done some calculations and came up with this number, $25. So I'm not investing $20. I'm not investing $30. I'm investing 25, something in the middle. I am actually making a profit of 2.5, which is not bad in my case. Move on to the third martingale. Again, you're not investing in $90 like in the aggressive method or capital preservation method. $40, you something in the middle. $60, you make a profit of 2. So over here, your profits would be small, as you can see in the Excel here, but there are no losses. There's no negative numbers here. So this is very suitable for myself because I trade this way. If you move on to the fourth martingale, again, here's some calculations here. You guys can have a look at over here, and you make a small profit but no losses. So if you look at the 8th martingale, which is reasonable enough, something in between these two, not as high as 21, but not as low as about 1200 here. But if you have a $2,000 account or something more than that, I think if you end up going to the 8th martingale, which usually normally I have, as I have tested in my trading, I haven't gone anything more than 4th or 5th martingale, so I did make some profits here. But I would rather, if I feel the trade setup is not even good enough to martingale, in that case I would just abandon that setup and move on to the next setup and not martingale at all. So this method I only use if I feel the trade setup is good and it will have reversal, or it will have some gain. In that case, I'll start martingaling. So basically, I wanted to show you guys these 3 methods. The first 2 again are something that Julian has given out, and it's there in his files. The third one is something that I've devised. You can have a look. You can have you can start trading if in your demo accounts. Have a look at my method, and if there's something missing or something you want to add on, we all can work together and make it more better so that we can minimize our losses. I'm not looking for big profits here because I have a small size account, small to medium size account. I'm not looking for profits, but I'm looking for previous losses to make up for them if I'm martingaling. So in that case, if some of you are doing that, please feel free to put in your suggestions in comments, or contact me directly and let me know if we can work together and make it more better. So download this Excel sheet, have a look, and if you guys are already doing one of these methods, you know, you just put in your numbers and you can get the results here directly. If you want to use my method, put in your numbers and see what are you gonna gain. So let's say, for example, if you have a, instead of a trade size of 5, you have a $25. You change the number here, and you can see all your other martingale sizes would be changed, and your profits would or losses would come here. So basically, you play with these 3 boxes which are in red, and see what suits you, and do let me know. Hopefully this video will help you, and you know, any suggestions and comments are most welcome. Thank you so much for listening. See you next time.